You have traded binary options for quite some time now, trading the ordinary currencies like Euro USD, and your results may not have been very good. You have been asking yourself, are there other instruments I could trade as a binary options trader that can give me an edge in the market? If that is you, this particular video about volatility indices is for you. Welcome, and your presenter in this particular video is Bernard, a binary options pro trader, coming to you from Binary Winners Club, where we trade with confidence. We, in this particular video, would want to learn what volatility indices are, what are the advantages of trading these instruments, what could be the possible disadvantages, and is there a profitable way of trading these things called volatility indices? They are financial instruments. Let's head over to the next screen. Volatility indices are simulated markets that are offered by a broker called Binary.com. Okay, so volatility indices, you find them with a broker called Binary.com. Now, Binary.com has many advantages. This is a regulated broker, and the broker is trusted by many traders. I have had an account with this broker for years now, at least 2 years, and I've traded the regular binary options, I've traded volatility indices, I've traded Forex with them, so they are quite a reliable broker. Now, you might be asking if these instruments are simply simulated, meaning there is a computer program that generates numbers that behave like the ordinary markets. The numbers generated, depicting the prices, try to mimic the regular Forex markets, for example. So you'll see normal movements, upwards, downwards, horizontal, that's uptrends, downtrends, and even ranging markets. You'll be able to see that. And you might be asking now, if that is the case, then is it possible the markets can be rigged? Can the broker play tricks against traders? And the answer is no. Because of the strict regulations that this broker is, has to adhere to, there is no possibility that the broker can manipulate the market in their own favor or against traders. So you can trade volatility indices with confidence that the markets will not be manipulated. Now, when you are on binary.com, on your browser, that's when you visit binary.com, you go to trade and go to volatility indices. You don't see the name volatility indices directly. You will instead see them categorized under synthetic indices. Okay, in a later video, I'll be able to show you how to access them. But they are called synthetic indices on binary.com. On your MetaTrader 4, they are known as volatility indices. But even on the web application for binary.com, they are still known as volatility indices when you go pick each one of them. But the category is synthetic indices. So what you get from this particular video, we are saying volatility indices are simply simulated markets, and they're offered by binary.com. They are not manipulated. Okay. Next is then we want to understand the types of volatility indices. From my analysis, because I've been trading this, volatility indices can be categorized into two: normal volatility indices and high frequency volatility indices. Now, the naming is based on how volatile the indices are. For example, under normal volatility indices, we have volatility 10 index, volatility 25 index, volatility 50 index, 75 index, and 100 index. Now, progressively from 10 to 100, volatility increases, meaning 10 is less volatile than 25, which is less volatile than 50, less volatile than 75, and 75 is less volatile than 100. So volatility increases as the number of the index increases. Okay. Now over to high frequency volatility indices, which are only three. We have 10, 50, and 100. Now you can only compare this high frequency or HF volatility indices with their counterpart normal volatility indices, in which case you would check 10 against 10. So high frequency volatility 10 index is 4 times volatile than the normal volatility 10 index. Similarly, if you were to look at 100, high frequency 100 volatility index compared with the normal volatility index 100, you would realize this one is 4 ticks. It's considered 4 ticks faster or more volatile than the ordinary or normal volatility index. Okay, so it's important that you get to understand these concepts. Moving over from there, we look at why we want to trade volatility indices. Just before we talk about the why itself, these are the same things I was talking about. Okay, you can see them listed here. This is the high frequency when you see this bracket 1S. So we have the ordinary volatility indices we have here. This is the ordinary one. This is the ordinary or normal. Another normal volatility index, normal volatility index, and another normal volatility index. The others are the high frequency. This is the high frequency index and high frequency volatility 100 index. So why should we trade volatility indices? Why would you consider trading this? Okay, let's head over to our charts and see reasons why you should be able to do this. Number one is volatility indices are not affected by fundamentals. You have been a trader for some time now. You know when you talk about fundamentals, we are talking about news. Okay, you know how crazy currencies can behave even when you are trading binary options. That if you have not checked your, the news updates on the news calendar, you will be surprised that you enter a trade and the market changes direction or moves quite rapidly, and many times will catch you off guard. This does not happen in the volatility indices market. So you can trade without worrying about news getting you off guard. Benefit number two, or reason number two why you should trade the volatility indices is these volatility indices can be traded any time of the day, any time or any day of the week, any week of the month, any month of the year, 24/7, 365. Interestingly, that means you can trade even during the weekends. Previously, I've shared screenshots of me trading during weekends. Okay, that's an advantage. Remember the regular binary options where you are trading assets like currency pairs, Euro USD, USD JPY. The markets are closed on Friday, so you wait for Monday. Volatility indices, you can continue trading during the weekends, even at night. Okay. The next advantage is they have very low spreads. If you trade Forex, you can trade these volatility indices as a Forex trader. Okay, you can do, you can go long, you can go short, that you can make buys and you can sell. If that is you want to trade volatility indices as under Forex, you will experience low spreads, which means you can comfortably scalp the markets. All right. The other advantage, particularly for all traders, whether binary options or Forex traders, you can still trade price action. You can study candlestick patterns and other things. You can do support resistance and other things like Fibonacci or pivot numbers and stuff like that. You can still combine your techniques with indicators like maybe moving averages if you want. You can do that. You can combine them. So pure price action or indicators or a combination of both is up to you. All right. Trades may expire. Another benefit, and this is very important for you as a binary options trader, that trades expire within a minimum of 2 minutes. That means you can enter a trade that expires within 2 minutes, 3 minutes, 4 minutes, 5 minutes, all the way, even to, I think, hours and days. Now remember, one of the benefits of using this broker binary options, that's binary.com, sorry, the broker is binary.com, is you can choose any expiry time. You can choose any expiry time. I think from 2 minutes upwards or 3 minutes. For normal binary options, I think it's 3 minutes upwards. For volatility indices, you can do 2 minutes upwards. And you can literally enter, an expiry time like 7 minutes, 30 minutes, 5 minutes, 4 minutes. You don't choose, you type the expiry you want, which gives you a lot of flexibility to fine-tune your own strategy and be able to trade depending on how you see your strategy performing. Quite a very powerful advantage and a reason to consider trading volatility indices. Now, why we trade? Reason number 6, you can trade these volatility indices in Forex or in binary options markets. As a binary options trader, that is, you can trade these volatility indices or you can trade them as a Forex trader. I already mentioned this before. Number 7, Binary.com, the broker who supports volatility indices, this broker is regulated. The fact that the broker is regulated, it means there is no room to manipulate the markets, cannot manipulate the markets. Remember, sometimes, Forex brokers can manipulate the Forex markets. Binary options brokers sometimes can manipulate the markets. Volatility indices is not possible to manipulate this. Maybe later on I'll be able to discover there is a way. The best I know for now is these markets being simulated cannot be manipulated, and the regulations do not permit manipulation of markets anyway. Benefit number 8, or advantage or reason number 8 why you should consider trading volatility indices is you can see you have 8 assets. You have 5 normal volatility indices and 3 high frequency volatility indices, a total of 8 assets. These are 8 assets you can trade 24 hours, 7 days a week, 365 days a year. Now, the last benefits and a good reason why you should consider trading volatility indices is this. Volatility indices are available for trading with normal options. If you go to binary.com, you can trade the ordinary rise and fall, where your prediction is price will fall from your current price or will rise. Okay, you can also do higher or lower, which is the ordinary put call or call put, where you are predicting that price will close above or will close below your entry price. You can do touch or no touch options, where you are predicting that price will not move and touch a given price level or will move and touch a particular level. You can still do ends between or ends outside, so you can declare a range and say the markets will not move outside this range or we move outside the range. Okay, same stays between or goes outside. So the normal ones that I personally trade, I usually do the higher lower, the rise and fall, and touch no touch. There are probably other traders who do the others, but that's fine. Okay, so moving over to the next is after we've seen why we should trade volatility indices, we now need to look at why we may not want to trade this. Why you should not trade volatility indices. These are disadvantages, okay? And you can see they have 3 disadvantages against 8 advantages. So, but again, trading is not for everybody. So if you think these disadvantages are serious for you, then don't trade. I must tell you in advance, the greatest disadvantage here will affect Forex traders, not binary options traders. Disadvantage number 1 is volatility indices are very volatile, very volatile. So if you're not used to markets that move very rapidly, then do not go the volatility route. Okay, prices can move very, very fast. Within a short period of time, can move very, very fast, upwards or downwards. All right, so you better be aware of this. Next is the MT5 servers. Now, volatility indices are traded on MT5, not MT4. They are traded on MT5, which you can download from binary.com. Now, these MT5 servers are usually maintained every weekend. Most of the time, they are maintained almost every week. And sometimes after they are maintained, when they are restored back, some some historical data is lost. Maybe some transaction that maybe happens several weeks back may not be available. But that's not a big problem, because if you want to access history, you can use tradingview.binary.com. That's a web application. You access that through your browser. You go to I think you go to TradingView. You can type tradingview.binary.com. You should be able to see the same thing you would see on binary.com's MT5, the one you can install on your computer. So that's not a serious disadvantage, actually. Now, for forex traders, why you may not want to go the volatility indices route is each of the different volatility indices has its own what? Each index has its own lot size as permitted. Okay. Now remember, when you trade forex, you talk about lots like 0.1 or 1 lot or 0.01 lots. So sometimes you come to realize that maybe 10 has a different lot size that's permitted from volatility 50 index. And if you're not very careful with which size you should use, you might enter wrong lot size and wipe your account clean. Remember, for forex traders only. We don't talk about lots in binary options. Okay? All right. So moving over from there, you are asking yourself, now, Bernard, what is the way forward? Now, the way forward is simple. I want to tell you that volatility indices can be very profitable. I have traded this profitably myself. You can practice. So if you are interested in trading volatility indices and in your country, you are allowed to do so. The broker binary.com permits your country to open an account to trade this. You are free to open a demo account. I think I will leave a link below. So open a demo account, practice on that demo account before you go to your live account. Okay? Remember, trading, I must mention this. Trading involves financial risks. Never trade with money you cannot afford to lose. With that disclaimer, question, are you ready? Now, if you are ready, you move down below this video. There is a description section. You will find my affiliate link there, or in the description section. Click that affiliate link, register an account with binary.com, start trying things on your demo account, then proceed to a live account. And you're asking, and so how? I don't know how to do this. In my next videos, I am going to share strategies on how to trade this. But if you feel like you want to go straight and start trading, I have a solution ready for you. Solution? You're asking, what is the solution? The solution is simple. At Binary Winners Club, we managed to develop an indicator, actually a set of indicators that once applied to the market can achieve 85 to 95% accuracy on average. And you are saying, Bernard, that is a very high win rate. Oh, be slow. This is not regular binary options where we trade, call and put. This particular win rate, the one you are seeing here, is strictly for no-touch options. Okay? We fine-tuned this strategy for trading no-touch options only. Now, with no-touch options, the payout is less. Sometimes 10%, 5%, 15%, 30%. It's low. That is how much you make if you win. And that's why the win rate is so high. Now, for this win rate to be useful and for you to remain profitable, from our own statistics, we realize that if payout is at least 15%, if the payout is at least 15% and you enter trade, consistently you trade with a minimum of 15%. That means when it's 20%, when it's 15%, when it's 18%, 30%, you will remain consistently profitable. Okay? Remember, a no-touch option means, for example, if the market is currently here, price is currently here, all right? You are saying that the market is currently here. Let's assume this is a candle. Let me see whether I can draw a candle just to demonstrate to you a no touch option. Let's assume this is a candle, this was another candle, this was another candle here. Okay, so for you realize price has made this movement upwards, and your prediction is down here at this price level. While the price is here, you are saying for the next two candles, that is 2 minutes or 10 minutes depending on your time frame, the market may move down, but it will not touch your price here. All right, that's what we are calling no touch options. Now let me give you a bite of what our solution can generate. This is a screenshot I picked today. It's dated 3rd of March 2020 and is for Volatility 25 index. Our indicator is called 90% accurate no touch signals indicator. And if you study the chart here with me, you will realize this signal popped up here. The next candle did not move to the open or the top of the signal candle. That was a win. The next one here, again, the signal came at the close of this candle. You trade that the next candle will not move and touch the open of the previous candle, which is the signal candle, which was a win. The third signal on your screenshot here, this particular one, I want you to look at it. Okay, so you had a signal here saying that after this arrow, okay, this arrow, sorry, after this arrow, you see here the signal, you are instructed by this indicator that the market will not move up to where that signal arrow candle opened. Unfortunately, the next candle went and touched the price, so this is a losing signal. And using the same approach, that was a win. This was a win, price did not touch. This was a win, price did not touch the open, and this was equally a win. All right, so effectively you can see win, win. So I think 1, 2, 3, 4, 5, 6 against 1, and you can continue counting. On average, you'll get between 85 to 95% accuracy, and that can be putting some little money into your account bit by bit. I call volatility indices the less risky instruments in binary options, and I've said this before in a separate video. Volatility indices represent low risk options for you as a binary options trader. And that marks the end of this particular video, guys. If you're interested, watch our next videos or contact us, and we'll be able to share more information regarding how to trade volatility indices profitably. Remember, our description section down below the video is a link. You can open a demo account on binary.com and proceed with testing some of these things. Thank you so much. See you in the next video. Bye-bye.